My name's Dale Verran. I'm the CEO for Fortune Bay Corp. We're a exploration junior company listed on the TSXV under the symbol FRR, and Frankfurt under the symbol 5QN, and on the OTCQB under the symbol FTBYF. We have two advanced gold projects, around 3 million ounces of gold in drill-defined resources across those. One of those is in Saskatchewan. It's an advanced project with a robust PEA completed in late 2022. Other gold project is in Mexico. It has a gold resource on that, plus significant potential for copper potential around the porphyry system on the project. Our more recent focus has been uranium. We've been generating uranium projects on the northern rim of the Athabasca Basin since 2021. We have 7 projects in total. 2 of those are under an option agreement, and we'll see drilling planned for later this year. And then we have an additional 5 projects which we've put together along the underexplored Grease River Shear Zone, which we're really excited to get moving in this current market.
Dale, good to see you. It's been a while, but I guess a lot's changed. You know, uranium is on the up, and gold had a fantastic week last week. And long may that sustain. So that should be good news for you. But we're sitting here at 10 million market cap. Shares have been on a downward trend. And I'm interested in talking to companies about how they stay relevant, how they survive, quite frankly, and you know what their plans are to be able to do all of that. So can we talk about your business plan? Okay, after 3 sort of tough years, you know, I think a lot of companies are kind of like, you know, switching out into different business models. What are you doing?
Yeah, so you know, when I joined the company in 2020, we were a gold-only company, just for those 2 gold assets, you know. But we saw the outlook for uranium. I've always been a big believer in uranium. You know, worked with Denison Mines for 7 years as the VP exploration. And when joining Fortune Bay, we had that 1 gold asset on the rim of the Athabasca Basin. So naturally, we saw opportunities, and with the outlook for uranium, we started picking up ground. And that's timed really well with obviously the uranium market where it is today. The initial projects were Strike Mermac, and we've continued to generate other assets. So we've really become sort of emerging uranium project generator, and that's been really helpful for us. You know, at the moment with this current option agreement at Strike and Mermac, we're getting cash and share payments. We're also operating that project. So we're becoming a more sustainable junior, where we're not going back to the market to raise lots of money, diluting shareholders in this current conditions, and building a sustainable business model through a project generator approach. And you know, we've also staked these additional 5 new uranium projects. We have the ability to do a similar type of deal, making the company more sustainable, and you know, taking that dilution at the uranium project level and not at the company level, where we would otherwise be diluting against these significant gold assets of almost 3 million ounces.
Right. So let's maybe kick off with the uranium component. I should say, well, let's start with because I think the picture I want to be able to understand is, I say, moving to a kind of prospect generator type model for now. I imagine, yeah. or maybe it kind of works out. I don't know, but you started as explorers, so who knows? Can we talk about what the deal structures or the options are on Strike and Mermac? You know, so you know, he partnering with, what's that deal look like, and why is that good for your shareholders?
Yeah, so that deal, you know, what's really important for us is to maintain equity upside in a transaction. There, we have a strong belief in the potential of this project. We went out with a concept in 2022 to test in the ground. We did some initial drilling, and we got all the right results to show we had the right geology. We intersected some mineralization. So that proved that concept. Now, bringing in a partner, we've worked with, there's a company, Aero Energy, who's now optioned that project. They've just closed the financing for $5.9 million, and that money is going to go toward funding exploration on those 2 projects. That deal, sees some cash come to Fortune Bay over the option period, $1.35 million in cash, another $2.15 million in shares, as well as we operate the project. So that's going to see us quite sustainable over the next few years, bringing in some forms of revenue and covering our costs. That deal allows Aero to earn up to 70% interest in the project. So at that point, after they've spent $6 million in exploration expenditures, we should be at a position where there's a discovery or not. We like the potential. We believe it can be there. And at that point, we have the ability to then fund a 30% share. And in terms of a big discovery, we know a 30% share in something like that, particularly in the current market, is going to be hugely valuable. So it provides our shareholders with a tremendous upside there.
Right. And so how much money did you spend on both those projects? Like I say, you kind of came late into it. I know you're ex-Denison, and they've got big holdings, throughout the Athabasca Basin after their most recent roll-ups, etc. But have you been spending the money on that, or did you manage to pick it up with a lot of data? I mean, why did people want to option that?
Yeah, so we spent, we put the concepts together, and we got in really ahead of the big sort of staking rush in Saskatchewan. We were onto that quite early when I joined the company, and we put together the concepts, which we then spent around just over $3 million on. So we did some initial data acquisition. We did some initial drilling. As I said, we were testing a new concept for these high-grade deposits in that area that hadn't been looked at. And we did get the initial results, but the market at the time, obviously, things were trending downward. We didn't manage to get traction on that. And we're in a position where we either go and raise more money at lower share prices, which we could have done. The flow-through money is typically there in Canada for those types of projects. That would have been very dilutive for our shareholders. And we're very cognizant of our gold assets and not to dilute against those. So we decided, let's try to put together the right deal for these projects and get someone else to fund where we can maintain an equity stake in that. And we've done just that with a great company in Aero Energy.
Yeah, I think we've spoken to them. Okay, so the rest of the money, let's see what they do with it, and hopefully delivering results into the market, which are good for both of you. Okay, but let's just say $3 million on that. Let's talk about Birch, pine, spruce, aspen, and fir. I think
that's right.
You don't have a lot of money available to you. You're not going to be able to go and spend $3 million on each of those or some of those anytime soon. So how do you? It feels to me like a slightly different type of strategy needed there. Are you getting a lot of inbound? Because we certainly are. People searching for uranium assets in and around the Athabasca Basin. So how do you come at managing to kind of create value with those assets?
Yeah, so the market's obviously great for uranium projects at the moment. So since announcing those projects, we've had a lot of interest for sure, and we're talking to numerous parties and looking to do a similar type of transaction to what we did at Strike and Mermac, and that's going to get those projects funded.
But how do you do that with? I'm sorry, how much data do you have on these? How much money's been spent on these?
Yeah, so we haven't spent a lot of money. I mean, they've been low-cost acquisitions, primarily through staking. We've done a small land acquisition on one of the claims, but it's low cost, and the value really is in the historical data. There's a lot of historical information we've been able to pull together. Saskatchewan's terrific that way in terms of their databases where you can pull this information together and then apply new concepts and ideas in terms of how to advance this in a more modern, systematic way. And we've really laid that out for our projects. We've designed plans and budgets, and it's really a case of getting people in to have the same vision for the concepts we have, and then fund that, and where we can maintain a stake in those projects.
Okay, so real kind of slightly earlier stage than Mermac and Strike, obviously, but you hope to have a similar outcome if you can pick the right management teams who've got access to capital to be able to do that. So that's prospecting kind of 101 there. Okay, obviously the uranium market, we're looking at price discovery there, or so we're a slight reset, but it kind of rocketed up over Christmas into 2024. I think there's some great expectations. Do you expect to see a lot more interest in the Athabasca Basin? And what does all this new interest and these new companies and all of this white noise do for you? How do you kind of stand out?
Yeah, naturally, in a market like this and a place like Saskatchewan, it's going to get real busy. Saskatchewan's just a fantastic place. One of the premier jurisdictions to go exploring for uranium. We've seen some good moves from the Canadian government as well recently, looking to shorten permitting timeframes and really put Canada on the map as a secure, stable supplier of uranium. And we know that's needed because of geopolitical concerns, etc. So, we're in a great place there. Standing out is always challenging in this time, but we believe we have the right projects and the right concepts to actually make a discovery. And provided we can get these funded, it's the exploration results are going to speak for themselves. And I think where we are with our new set of projects, the Woods, as you mentioned, they're all named after trees. They're along this Grease River shear zone that really hasn't seen any work yet. Has favorable geology. It's got a huge uranium endowment, including one of these Athabasca-related deposits. So we see all the right ingredients there, and it's really a matter of getting some of the initial work done and producing those results, which is going to really make one stand out in this market.
Right. Okay. And how much more staking are you doing? Have you got a team up there? Have you allocated a budget for it? Will you continue to stake in whether it be the Woods area or anywhere else in Canada?
Absolutely. We've really adopted a project generator model on that uranium front, and I guess we can be seen as emerging project generator, having put together Strike and Mermac, put that into an option now, got a new package of projects. It's a district scale play, 40,000 hectares, lots of optionality, lots of targets. That's all parceled together as the Woods project. Ideally, we'd like to put that into have a company work that as a single district scale package. And then we're looking at other opportunities on an ongoing basis. We've, obviously through my experience, as well as our technical director who's got significant experience in the basin, we have great databases and ideas around where to go next and continue to do this.
Okay, so now before we get on to gold, so if I look at this kind of prospect generator model, certainly as it applies to the uranium, if I'm an investor, it's obviously going to be a sort of longer, more drawn out and sort of different, maybe if things work out, sort of, bumpy return for me. Because prospect generators don't tend to kind of go, they either spin things out, have a liquidity event, an exit or something, and that's I need to know that sort of going in here, that you're picking up good projects which can have a liquidity event, because it is, as you say, with that white noise and that sea of people jumping on bandwagons. I think every goddamn project that's sort of sitting in the back of someone's drawer is going to be drawn out and promoted and pumped, but they won't necessarily always equate to value creation for shareholders further down the line. So in terms of what you look for, the profile of what you look for, can you explain a little bit about that?
Yeah, so we've I think our the equity upside is obviously important in these projects to keep that going. But from an investor point of view, it's not just the discovery potential and us having a decent equity stake that's important. It's also that we, in this current market, we're not going back to raise lots of money. So investors aren't diluting. They've got exposure to these significant gold assets, which they're not diluting against, but they're seeing work go ahead on these uranium projects where we have an equity stake and the ability to see some upside in the event of discovery.
Okay. Let's see how you get on this year. Let's see where some of these conversations go, because I'm sure you're getting a lot of inbound on that front for sure. And then, I'd be keen to sort of see who are the management teams that you're investing in. Do they have money? Do they have access to money to actually advance these things, or are they just trying to milk the market? So, that's on you to pick the right partner there. Should we skip down to, well, where do you want to go gold wise? Do you want to go down to Mexico or?
Yeah, I think Goldfields is our flagship Goldfields asset.
Yep.
So yeah.
Well, should we start there? Let's start.
Yeah.
There. Okay, so just remind everyone what you've got there.
Yeah. Goldfields, it's near Uranium City.
Yeah.
We did a PEA on that project in late 2022. It's got a mineral resource of just around 1.2 million ounces. The PEA itself used 99% indicated resources. So that means it's a higher confidence estimate. We're not using an inferred resource. So the resource already de-risked to a large extent. And that PEA produced, it was done in a base case of $1,650 an ounce. It produced an after-tax NPV of $285 million and an after-tax IRR of 35%. Obviously, that's at $1,650 an ounce. Now the gold price well north of $2,000. Our upside case on that PEA was at a $1,950 an ounce gold price. that produces an after-tax NPV of $460 million and our after-tax IRR of just over 50%. So those economics continue to look better. Obviously, since 2022, we have seen some inflationary increases, so those would need to be factored into an updated study, but it's certainly looking really attractive around that after-tax NPV of $500 million and the IRR north of 50%. So a really nice asset. It's got a few other very key things I should mention, and that the permitting's well advanced. It's already got a approved EIS for the project for on one of the deposits. There's two deposits. The main deposit box has an approved EIS for 5,000 open pit operation, a 5,000 ton per day mill. And then outside of that, there's good project infrastructure. It's a very simple mining operation, simple open pitting, nice competent rocks. It's got simple mineralogy, so the very simple flow sheet, free milling gold, no other deleterious elements associated with that. So a lot of key points there, why it's a project that can be advanced in a shortened time frame relative to other gold assets in Canada.
Right, and now I'm going to use the uppercase because Goldwork's going to pop to that. You're sitting at say over 50%, over 50% IRR and 1.3 year payback, fantastic. But it's got this PEA stage, right? So we're a little bit. Let's set plus or minus 30%, as I always say with PEAs, and we've seen a lot worse than that recently. But let's go with it. CapEx of under 250 million. Right, so under 250 million. So it's not an onerous capex for a project which returns something like that. But you've got a long ways to go, right? You've got to get through these economic studies, and you've got to get through the kind of environmental, and you've got to get through lots of admin, as we call it, to get it to the finishing line where you can start talking about FID and financing and so forth, and bring you back to 10 million market cap. So you're going to have to maybe think about it a different way in terms of getting it funded or getting all of that admin financed, and eventually getting this thing to a point where you can make a decision about how you fund it. What do you need? Well, we know what you need. We need people to get excited about your project and drive that share price up and market cap and ability to raise capital. But what's the reality of at the moment? We've had one good week of gold. Right, so we maybe a bit premature in terms of getting excited, but how does a company of your size even contemplate getting a project like that over the line?
Yeah, so we announced a process last year with a group out of London, NRG, who have been looking to transact on the project. Now we realize it's a difficult time given low market caps, where gold equities sit relative to the price of bullion. But I think the important thing there is we've gone out, we've reached out to a lot of the, companies in the space, mid-tier developers, investment funds, strategic partners, etc. And they're now well aware of the projects. We've had a lot of people review our data in detail. They see the merits of the project. So a lot of that work's been done. So I think we're in a position as we hope M&A activity picks up, we're in a position to potentially move quite quickly to a good transaction whereby we can see this project funded and move through the feasibility stages and to a construction decision.
Right. So Energy, what they are brokers, they're advisors.
Yeah, they're financial advisors.
Okay. They're getting your story out there.
That's right. So they've been talking, and we've had there's a lot of interest, but no one's really moving on the M&A front. And, I think it's quite a hard time to move because also where we sit market cap wise, it's, there's obviously optics involved around doing transactions. But I think the interests there in the fundamentals of the project, the technical side has been reviewed and vetted by a lot of parties. And I think there's the real ability to, as the market picks up, which we think it will continue to do, there's ability to do something and get that project moving. And in terms of taking it forward, I think it's important to note, while it's a PEA study, this project's been around for a while. Now, our PEA really, we've really just optimized what we believe the development plan could be. But there's a previous PFS going back to 2011 for the project. So a lot of the data is already there. As I mentioned, the drilling, most of it's indicated already. So we don't have to spend a lot of money on drilling. The environmental baseline, it's got that approved EIS, but it's got a vast repository of baseline data we can draw from, geotechnical studies, etc. So while it's a PEA study, the project has a lot more data that can be leveraged off to move it quite quickly and more cheaply into PFS and FS stages.
But why hasn't it happened so far? You said it's been around a long time, which starts to become a problem, right? People sit and say, oh, there's something wrong with this thing. So is there anything wrong with it? Has it got technical issues? Is it...
There's absolutely no issues. And, our PEO was done by Senko. They're a very reputable group. And you can read through that tech report, and there's really no technical, environmental, social concerns that have been identified. It's really, I think we're moving into time where there's a need for new gold development projects, particularly in places like Canada. We're moving into this higher price gold environment, and projects have their day. And there's been various issues in the past through ownerships and mismanagement on that project. And I really feel we're getting to a stage through like an optimized development scenario, higher gold prices, a better understanding of the deposit. We've done a lot of work on the mineral resource. It's a much more robust mineral resource. It's at a good place where this is a project that can, and I believe will, move in this gold price environment.
Right. How do you... Okay, I get the energy guys looking for, introducing the project to lots of people, but can you finance the next economic? Can you finance a revised PFS or an updated PEA? I mean, is that something you want to do in terms of capturing that value? If no one's moving in the market for whatever reason, and without wanting to kind of give, dilute the heck out of yourselves or give away all of the upside on something like this, I mean, what are the other options available to you? Yeah,
we certainly can, because we don't need to go out and do a bunch more drilling now, convert inferred to indicated resources. We can do a PFS for a somewhat nominal or minimal spend compared to other PFSs. So it's certainly an option available to us. Where we sit at the moment, market cap wise, our focus has been a bit on uranium. We haven't initiated that, but we certainly have plans, and a budget in place to advance to PFS. So it's certainly something we would consider, and just waiting to see where the market moves in the short term here, and where some of the interest lies with respect to other parties on the project. And then we'll have the ability to move that, and it can move quickly, as I mentioned.
Right, yeah, because I think it'd be interesting to do that and sort of get a firmer grip on the pricing reality and what ASIC actually ends up looking like. Because obviously, like, gold's prices move, but so have costs. I know it's from 2022, but I think there'll still be some costs that need reviewing. But anyway, leave that with you. We look forward to hearing how you advance that, and if you advance that to the PFS, and when you start that process, or indeed make the decision to start that process. Let's bounce down to Mexico, because we haven't talked about it for a while. So what's happening down there?
That project, it's incredibly exciting asset. I mean, it's got a mineral resource, a gold resource of 1.7 million ounces there. It's an open pitable target. The grades are well over 1 gram a ton. It's an exciting gold project just on its own. But what's interesting about it is, in these porphyry environments, what's been explored on that project is the lithocap. And that's these thin reactive cover sediments where you get these epithermal and skarn systems. And there's been quite a bit of drilling on that. But beneath that sits this huge porphyry system. And if you look at our website, on our corporate deck, you'll see the setting of this. I mean, it looks like Bingham Canyon or some of these other big porphyry settings where these large copper deposits are found. So we have the geological setting there, and the porphyry system has never really been explored. So while there's opportunity on our existing gold resource plus other gold targets in the shallower lithocap zone, there's this large buried porphyry system. It's largely buried where there's enormous copper potential. So we're looking to advance that. Now, that project is in southern Mexico. It's not a well-known mining state, Chiapas, where it is. So, in the past, the community is very key to moving that forward. It's been done successfully by our predecessor, Linear Gold, and we still operate there under Linear Gold. And they certainly have the company still has a really good reputation amongst the community. We went down there last year a few times to sort of canvass with the community, meet some of the leadership, business, political, community leaders. And the environment there is certainly really positive at the moment for moving that forward. So we believe there is a avenue to move it forward. It needs a bit of work. You need to establish these access agreements, but we certainly believe it can be done. And it's one of those, projects where it's got this gold potential that's immediate, but there's longer term porphyry copper potential. And we see, some of these companies making these slightly deeper but long intersections of copper. And we certainly see the potential there. There's been one hole drilled there from surface, 600 meters at a 0.8% copper equivalent. It's an all grade hole from surface, and there's a mineralizing system there. It just hasn't fully been tested. So we certainly looking to get that advanced, and as a key asset for the company.
Okay, so again, same question, which is how do you move this forward? So it's been held up. You've kind of got to go again. Environmental, social, all of that kind of stuff are under control. But it's going to require money to move that project forward on all fronts. How do you do it? Because you've got uranium, which has been moving forward. You've got Goldfields, you want to move forward. You've got this as an opportunity. Come back to the size of the company. You can't be all things to all men, and because you don't have enough money. So what's the idea down in Mexico?
Yeah, again, it's the same theme that we've spoken about for the Uranium Projects. Goldfields looking for strategic investment partnerships that can help move these assets under the right deal for fortune-based shareholders, where we can retain significant upside in these projects because they obviously see the merit in them. So again, Mexico, there have been discussions there around how to move that forward, and there is interest in the project. So again, that's another avenue we're pushing along. And these are all, we diversified, we're in great commodities, and we're looking for the right partners to take all this forward. And amongst all of the set of assets, there's going to be projects that are going to be winners. I'm really certain of that. So it's a case of us diligently going through that process and unlocking the value on these assets one by one. It does take time, but we know this industry, it does take time to build real value. And we committed to doing that, and we have all the right projects and the right pieces in place to do that.
So but what I'm hearing is with the gold as well, it's prospect generation time, and obviously some more advanced than others across the portfolio, but you're sitting on a lot of ounces. Hopefully you'll be selling a lot of pounds as well. That's what I'm looking at. I'm looking at a prospect generator, and that's so once I understand that entirely, then I know what I'm investing into. There's no asset here that you think I'll hang on to this, and in case the market picks up and I think I can advance this, is there kind of favorite child in here which you think, well, actually maybe we should have our own kind of flagship and not be entirely 100% prospect generation model focused?
Yeah, I think it's a case of being, opportunistic and looking at the market in the right deal terms, right? If we get the right offer for any of our assets, the right partner, the right funding, we'll do that, But if it's not right, we're not scared to hang on to it for different market conditions. But it's got to be, we're not going to give these assets away. We'd sooner park them and wait a bit for the market to improve. But at the same time, we do recognize, we need to start unlocking value and trying to realize the right transaction. So we'll continue to do that. And when the right transaction comes along, we'll move with that.
Brilliant. I just wanted to get an update from you because, like I say, it's been a while. It's been a wild market, but for you, gold and uranium seem to be on the up. How you were sort of cashing in on that, or setting yourself to be able to cash in on that one. So now we know. So I appreciate your time, Dale, and we'll stay in touch and we'll see you soon. Okay.
Yeah, great catching up, Matt. Thanks for having me.